talk about this evening. Now, ladies and gentlemen, I want you all this evening to understand a few things. This is basics. So we're going to take this back to the basics. And yes, as you log on, continue to drop it in the chat. Continue to drop it in the chat. So I want you all to first and foremost understand our call schedule, understand mindset. I want you to understand your time frame confluence. I want you to understand, just a few things this evening that we're going to talk about. And so we definitely have enough time to get it all in, but it's almost like a carryover from last week. That's what this is about. So for those of you all who are just joining us, and for those of you all who are already on the call, once again, just let me thank you. Let me welcome each and every last one of you all. Let me welcome you to BYOB Market Talk. So I see Nigeria, Chicago, Jacksonville. Okay, so and another Cleveland, but I definitely see you all joining us this evening. And I want to say hello, good evening. And we're definitely going to have a wonderful evening here. Now let's get this mindset right. And why is this on my mind? It's on my mind because, hey, Las Vegas, it's on my mind because of the simple fact that we are sitting here coming up on a month of December. And we had actually thank you for that. We had actually no idea, actually no way of knowing what this year was going to bring us. Absolutely none. And it's all about your focus. Okay, it's all been about your focus, what you were able to accomplish. Now, you all have made the first step. You all on this call, you definitely made the first step. And that first step is I made a decision that I want to be my own bank. That's what you did. And so now we want to operate in that right mindset. Now we want to operate with the right thought process, and we want to be there. So I want to explain to you why these affirmations are so important. You watched our radio broadcast today, Hidden in Plain Sight, the broadcast. Now, if you watched that broadcast or saw it, yes, we stream live on Facebook. Let me get a 555 in the chat, because I want you to understand just how important that is and how important that is for you. So there you go. I'm so glad that you were able to join us. Now, that's important to you because today we talked about compounding, and I'm gonna pull up a compounding sheet here in a minute. We did it last week, but we're going to talk about it again today. Now, we're going to talk about that, and the reason why that is so important is because we have to have that mindset shift. We have to have that mindset shift in our mentality, that mindset shift where we were talking about compounding and what God has ordained for us, but tonight we're going to talk about what's already ordained for you. So if you know that it belongs to you and you know that it's there, now let's have the mindset to go get it. Let's have that mindset to go achieve it. And that is so important, as our mindset and our thought process. And that's why every time we log onto this call, we begin with, I am a BYOB master trader. I am the signal. I am 777. Well, and look, let me not forget all my trades in and profit. I am 777. I'm reading the chat and talking to you guys. So, and this is definitely some of the things. Now I want you to add to it, but do not take away from it. And the reason I say that is, the reason I bring that up is why is that important? I am a BYOB master trader. Why is that important? You are the signal. You want wealth and freedom. You want the things that come with that. You want the things that transpire with that. I am the signal. Let's think about this for a minute. For an entire week, I was out of commission for an entire week. So if all we did was throw signals, if all we did was literally just give signals, then you all would not have taken any profit for an entire week. So you think about that for a minute. We talk about signals giving you something that's literally only gas money, or what you're able to achieve and accomplish with signals, but you are the signal. And yet, not one comment from me, and that chat was flooded. You guys flooded the chat. So this is why we do the calls the way that we do them. This is why we take the trades and navigate the charts the way that we do them. So you are empowered. So thank you guys for your approach. You got me off of taking signals. Praise God. Look at that. You know, I always have time for a testimony. And so that's why the mindset is so important. That's why you understanding what you have is so important. And all my trades in and profit, we want to speak that thing. So when we back tested it at 92%, we want to think that. We want to believe that. We want to know that. We want you to understand that if I say all my trades in and profit, you are definitely one of the ones that walk in a 98%, walk in a 99%, because you have individuals, and some of you all even hit 100%. How do you walk off of your job? How do you, if that's what you want to do, how do you make that shift, that legacy shift? Why is an 11-year-old, after less than a month of going through the academy, understanding, listening to these calls, why is he able to take trades? Because children don't think with blocks. Excuse me. Children don't think with mental blocks. Children don't operate with mental blocks. You think about the persistence that a child has. You think about the persistence that they come with. Life has not transformed their mindset yet. And so just think about that persistence that comes with a child. When they want something, they are very persistent to have it. When they want something, they are very persistent to achieve it. How many times do you have to tell a child no? How many times do you have to tell a child to stop asking you for something? How many times do you have to tell a child, you know, until they are going to be so persistent, you're going to cave before they will? And they already know, they have that relationship. Right? We want that relationship with the market. You see, they have that relationship to where they understand, oh no, I need to wait 20 minutes or 30 minutes. I need, you know, they know what your time frame confluence is. They know where to hit you on the charts. They know exactly how to, you know, how to caress you and what exactly needs to be done. And so that's the mindset that you have to come from, and that mindset that you have to operate in. And so that's why a child can grasp this, because they don't allow those mental blocks that we place there ourselves. We place those blocks there, and they don't allow that to manifest. So that's why we do this at every call. It's that intentional shift and that intentional focus of you being that master trader. So let me go ahead and get started here this evening. I want to definitely get started here this evening. So understanding that, and understanding where we are, and understanding what is actually transpiring with us, I definitely am excited, because I want to show you a few things. Now, I am going to, because we're talking about discipline a little bit tonight. But if this is your first time on a Market Talks call, if this is your first time here with us this evening, let me get a 111 in the chat. Let me get a 111. And if you are still learning how to cash out, let me get a 222. Let me get a 222. If that's who you are. So welcome, welcome, and welcome back. Welcome, welcome, and welcome back, everyone. So definitely, you know, I see quite a few of you all on here this evening that's still learning how to cash out. So we're going to do a few things. I'm going to take you somewhere else first, and then I'm going to come back and I'm going to show you exactly the BYOB cash out. Now I'm going to pick up from last week first and foremost, and picking up from last week, I want to talk about this compounding sheet. All right, I want to talk about this compounding sheet, because I want you to understand what your discipline will do for you. So I want you to have that mind of a child, right? I want you to have that mindset of, you know, I'm very persistent, I'm determined, I am going to achieve my goals. This is what was declared for me. This is what I have. So I want you all to operate in that thought process and that mindset, because that's what we are this evening. So now as we look at this compounding sheet, so we've been taught, and another reason I'm bringing this up, our radio broadcast, we talked about compounding. So we talked about God's law of compounding. So let's just, and it's on there for you all to definitely go be able to watch it and view it again. Of course, we'll have it uploaded, but I want you to understand that this is something that we're supposed to do. We're not only supposed to compound out, we're supposed to compound in. So no matter what your trading style is, no matter what your thought process is, no matter how you feel about it, you know, you want to grow, you know, exponentially, you have a high risk level, a low risk level. You know, the biggest thing that you have to have is that discipline, and you want to first have a foundation of understanding where you're going. So if I have a foundation of where I'm going, I have a foundation of what it is that I want to accomplish, then you will accomplish it. You cannot operate in any doubt or anything like that in your mindset. So, and as we go through this, ladies and gentlemen, drop it in the chat if you have any questions, comments, or even testimonies. Questions, comments, or testimonies, because that's what this is all about. Now, first thing, you all get enrolled into the academy, because education is key. You cannot do anything without education. I want to stress that. You know, we go to school for everything, and we have no problem going to school for everything. But then at the end of the day, when it's time to take your financial wherewithal to the next dimension, you know, we have to be persistent in everything. How you do one thing is how you do everything. And so you want to make sure that you're okay with investing in yourself. And why am I bringing that up? I'm bringing it up because it's Christmas time. And most people forget the reason for the season, for regardless of, you know, how you celebrate it or what it is that you do or what happens in your personal household. The bottom line is it's a heavy spending and a heavy shopping area. So I want you to shift your mindset to where you're doing things for yourself. So, and that's a good question. You know, that's a good question. I want you to understand that so financially, you have the income and the money to do what you need to do to invest in yourself. And so we want to get our mindset and our principles in order, because, you know, your investment should never dictate anything. So let's just have this conversation. So can I change you see how, can we gain 10% daily using a compounding sheet, or do we keep it at 5? Once again, it's a personal preference. You see, I just shifted it down to 2. I can take this down to 1%. Okay. Once again, that's a personal preference. Can you put it at 10%? Absolutely. You can put it at whatever you want to. It's just math. It's just numbers. So it's just math. So whatever you put in here is going to calculate, and that's going to determine your lot size. And once again, this is for your Forex pairs. I'm not going to do a compounding sheet for your, I'm not going to do a compounding sheet for your indices and Bitcoin and gold and all of that, because once again, you should not be trading that with your Forex. And I want you to treat that like bonus money. However, you definitely can trade it, but I want you to demo it first and get a feel for it to understand. Most of you all now, since we've been doing Bitcoin, since it's been on this rise, you all have definitely been trading Bitcoin. But also you need to understand those stop losses and all of those things are extremely important. They're very, very important to your financial, you know, to your financial gain and to what you're looking to accomplish. So if I put this at 2%, so we'll start low and then we'll gain it. So if I put this at 2%, all right, guys, if I put this at 2%, what you're saying is, okay, let's say I had a balance of 500. Let's do a different, we did 500 last week. Let's just do $300, okay? Work with me. All right, let's do $300. All right, we did 500. That's on last week's recording. So now what you're looking at. So actually, you've been thinking of strictly trading indices. I mean, you can. People do. It's a personal preference once again. So it is a personal preference. I know people that do, and I know some people that don't touch them. So it is a personal preference. But if you do that, you need to understand how that vehicle moves. You want to understand the impact. And that's something that I want to show you. I'm not want to show you. I actually have it pulled up to show you, because I want you to understand how that navigates and what it does. And so I'm going to show you different prices on here. And you see that I'm at $300 at 2%. And you see what my lot size is. So if you only have $300 in your account, as you can see, if you're starting with those $300, your lot size should not be at like a 0.50 or, you know, well, I'm trying to grow my account quickly. Patience, profit. Patience, profit. You focus on the skill set, the money is coming. Patience, profit. And this is where you need to be. And you definitely need to have a stop loss in, and we'll talk about where that goes in just a moment. But what you're going to see is that with each trade, okay, so whether with each trade is your balance increases, this increases. Now, but also what I want you to understand is that if, let's say I hit a stop loss, we're at 92%, let's be real, I'm at 92%. So I'm here and I hit a stop loss. And so what has to happen is I just come back up to where it takes me to, and I adjust my lot size. So right here, I'm still at 0.06. Your balance should be what's always moving you forward. So, and now of course, if we're doing where we're going to talk about that time frame confluence, you're going to see how that makes a difference. Now for my scalpers, my intraday and my swing traders, do you see how the lot size? Look at that lot size. So you're a 0.06, a 0.01, and a 0.01. So it doesn't matter. Once again, personal preference. We all have different personalities. We all are different people. That is who we are. And if that is, you know, if that is the case, and if that's what's going on, and if that's the reality of the world we live in, then if somebody is, you know, a scalper, or if someone is a intraday or a swing trader, you know, this does not, you know, you definitely want to make sure that you still follow compounding. We'll stand the stop loss effect compounding. That's what I'm getting at right now. That's what I was just saying, is the fact that if you do hit a stop loss, obviously your balance is not 331. So, you know, on that trade, you made 649. Obviously, your balance is not 331. It might move back up around at 324. Now, understanding this is a round, okay? This is a round. This is a round and about figures. This is not going to be a definite, because each trade, the spreads, your broker, and all of that, you know, all of that takes into account. So that's your take profit. So if I'm doing 10 pips in cash out, then that's my lot size. Over 10 pips, then you're down to a 0.01. So that's your take profit. So that's where you cash out. Now what you want to do as you go down, I want you to show you, and that's why I say 125 successful trades. So whether you do 2 trades a day, you do 5 trades a day, you know, what's your discipline? This is where you want to have that trade, you know, you want to have your trading, you want to have that balance in life. You want to have that, you know, your trading journals. You want to have all of those things, you know, your discipline. What is it? How do I want to trade? Do I want to get up in the morning? Do I want to sit in front of the computer all day? So you want to have that routine. You want to have that, and you want to be disciplined. That discipline. BeYourOwnBankMovement.com. That is where it's at, under files. BeYourOwnBankMovement.com. And so you notice that $200 at 2% after 125 successful trades. Look, we have over $3,500. And now, when I come back up, let me change this to 5%, and I want to show you all something different. So I'll change this to 5% with them same $300. At the end of those 125 successful trades, look at the difference that percentage makes. So, but you have to be comfortable with that. I want you to understand it, because this is your risk management. Your lot size is going to grow. So I love the 777s, but I want you to 777 with a purpose. I want you to 777 with intention. I want you to 777, you know, because if I'm doing 777 and I'm $5 and I do $5 and I got $5 and I have $5 and I have $5 and I have $5. Do you see what I'm saying? 5 and 5 and 5. So I just put 777 in the chat, and I put that 777 in the chat, and I put 10 of them in there. But all I did is 5 and 5 and 5 and 5 and 5 and 5, and I did not compound. Then I'm cheating myself out of income. I'm cheating myself out of my wealth. So we get so comfortable with compounding out. We need to get comfortable compounding in. And I'm adamant about a demo account. If you need to demo it with the compounding sheet, then do it. And before you start compounding, I want you to be comfortable in your trades. Before you start compounding, I want you to be comfortable in your trades. I want you to have that comfortability, and I want you to have all of that in your trades. So if you know, and so then you start compounding. So what that means is, you know, you say we are wild, cheating ourselves. You say, can I call my job and tell them to stick a fork in it? Because I'm done. I love it. I love it. I love it. So as you look at this with this $100, and so if I scroll down here to the bottom, You see now off of $100, you've made over 44,000. And so, haha, let me pull up this next sheet for you. And so now what you're seeing is the fact that you're growing. So that's at 5%. So even if you're that modest person, okay, even if you're that modest person, you see that if I am, let me show you something. This is so important because some of you all want to go get 100 pips the first time. You want to go get, you know, you want so much on the first trade. And well, can I trade on the hour chart? Can I go do this? Well, let me show you. I started with $100. I needed to be doing 10 pips and cash out. Do you see here, I have absolutely zero lot size? No lot size. That means I do not need to be trading on a higher time frame. Now you understand why we always start on a 15-minute chart. The 15-minute chart is not the only place to trade. The 15-minute chart is not the only trades that you can take. This is not just a scalping strategy, but from a risk management standpoint, from a risk management understanding, you know, from you properly, because on that hour chart, you have pullbacks. On those higher time frames, you get those pullbacks. And now you understand why we educate the way we do. Everything is from a systematic process. And so you see that right here, you know, what I'm looking at is a 0.02, but anything over that, over 10 pips and cash out, I don't need to touch until I have $184 in my account. So for those of you all, I get the question, can I start my account with $100? Absolutely you can, but you're not doing anything other than 10 pips and cash out. Actually, it's $188 until you have, so up in that area. So remember, this is that around about because GBP NZD might pay more. Well, it's going to pay more than a CHF, okay? So you want to understand that based on the currency, your broker, all of these numbers and figures can be a little bit different, but this is a guide. It's to guide you. It's to help direct you, all right? And so now you see, it's still over $1,000. It's over $1,100 with the lower risk. And so you're still in profit. And I definitely just wanted to point that out to you. So before I pull up, I need you to go to the playlist on the YouTube channel, Trading the BYOB Cash Out, and they're getting started. There's a playlist. There's a playlist, Trading the BYOB Cash Out Strategy, and there's an entire recording, an entire trading that actually is dedicated to that question on can we tell which pairs pay more? And something as simple as, you know, look at how many pips they give you when you run your mouse over it is a little short, a cheat sheet, but just for the complete understanding, go to that playlist. So, you know, like when we pull a mouse over the CHF pair and we see 10 pips and we pull it over a GBP and that's 80 pips. So that's some indications of how, and then also understanding, like right now we be in the Asian session. So just from some clarity. All right, so any other questions, comments, or testimonies on this sheet before I change it out? Awesome, awesome, go watch it, go watch it. So now let me show you, let's continue to talk about your discipline. Let's continue to talk about some discipline. Now this is a trade journal. What you're looking at right now is a trade journal. And understanding this trade journal, you can see, you want to document. I tell you guys all the time, you need to be monitoring your trades. You need to be documenting it. You need to be writing it out. You need to be understanding. So we just talked about 10 pips and cash out. So that's your goal. Now, sometimes you'll look at it and you'll say, you know what, that's a 5 pip trade. That's okay. You want to document. So when you ask questions like, well, so I want to trade X, Y, and Z. I want to trade just indices, or I like GBP, or I like X, Y, and Z. So whatever it is that you like, this is going to tell you, well, I like trading in the morning. Well, I like trading in the evening. Well, midday is a time that I don't touch the market, you know, things like that. This will tell you that, because if I'm documenting my trades, I took the trade, I took it on this day, this the currency I took, did it meet the cash out criteria? Okay, did it meet the criteria? You know, what session was it in? You know, so am I a London trader? Am I US and London overlap? Am I a Asian, you know, Asian session? Which session am I in? time frame did I take it off of? Am I trading on the 15-minute? Am I trading on the hour? So what was my lot size? What was my profit loss? So understand these are numbers that just got plugged in. So I just want you to understand that. But did I win the trade? Did I lose the trade? And what notes? Oh, I didn't wait on the PSAR to flip. I took the trade on the second PSAR. So I took a chance. You know, be honest with yourself and put those notes there. And so you will see. So I didn't put a stop loss. You know, so what if I hit a negative because I hit a stop loss and it was negative, you know, which it should never be. But I'm talking about some of you all with this because we're talking about discipline tonight. So now I'm at negative 200 and I'm going to come over here and I put, I did not put in a stop loss. It should be, both of these should be on the website. I will double check to make sure this one is on there as well. But they both definitely should be on the website. If it's not, it will be. It will get, I will make sure it gets uploaded ASAP. So you are welcome. And I'm glad it's helping you. So this is going to tell you. So now when you say, oh, I didn't put a stop loss in. Oh, and why did I emphasize that? Because I hear it all the time. I see it in the chat. I get asked a question and well, it appears that, you know, different things. So now instead of being up almost $50 or, you know, only being down a little bit, now you're down $150. And so why is that? And so you have to look yourself in the mirror and we have to be honest with ourselves. I did not put a stop loss in. And this is why I say discipline, patience, profit. This is why that discipline is so important. Because you can come back and look at this. What is my account balance right now? Am I wealthy? What does my compounding look like? And then I can guarantee you, if I ever get the question, well, my stop loss is X amount of pips, because the BYOB cash out strategy with that PSAR flip is not as many pips as the recommended pips based on where your it's just not based on, you know, you should, I see so many different things that talk about a 15 pip stop loss, a 25 pip stop loss, 50 pip stop loss to get 10 pips. So when you understand that, that's the PSAR determines your stop loss. I've seen it at 10 pips. I've seen you now, you can cushion it more than that if you want to, which is fine, but I just want you to understand that. So you would not be looking at a $200 loss. That's because you just let it keep going and you're sitting there looking at it like, oh my gosh, will this ever turn around? Oh my goodness, you know, what is happening right now? Oh my gosh. And so we don't want to be there. We don't want to operate in that. And so that's why we always want to make sure that we journal. When I'm saying, are you journaling? Are you journaling? Meaning, are you writing out your trades? So, because what we want is this wealth. What we want is this. This is what we want to achieve. And this is what we're going to achieve. So we're going to operate in a discipline. We're going to operate in the understanding. And we're going to operate because think about on your job, you're disciplined, you're oriented, and you're doing it with somebody else's money. You're doing it with somebody else's time. You're doing it for someone else. And you sit there, you don't take shortcuts then, and you actually take extra steps to make sure that you're operating in excellence, you know, and because you're thinking about that review or you're thinking about all of those things. Let's think about your wealth. It's December. It is December. Let's talk about December being, you know, let's just talk about December. You know, we've had cash out month. We've had it all. You know, this is the month of giving. So let's give ourselves a gift of wealth and financial freedom and financial peace and financial understanding and financial education. Let's give ourselves that. So let's do that in December. Okay. Let's declare the month of giving. So this is the month of giving. So give yourself. You deserve it. You've earned it. So give it to yourself. Let's do that. So now let's get over here to these charts. Let's talk about the BYOB cash out and talk about a little bit of what has been going on and what has been transpiring. This may be a silly question, but could we double the lot size and go for 5 pips? You can twin trade technically. So you can twin trade, and no question is a silly question. I'd rather you ask the question and not, you know, I'd rather you ask the question. So you definitely can twin trade. So yes, we work hard because of that promised paycheck for a well done to increase their bottom line. Absolutely. So let's do this for ourselves. Give yourself the gift. Give yourself the gift of financial education. Let's give ourselves that gift. How about that? How about that? let's give it to ourselves. So this is the month of giving. So, and we're going to start with you. 1 million families financially educated and impacted. So now let's look at this currency pair. And now I'm going to look at this, and then we're going to go to the BYOB cash out strategy and talk about time frame confluence. So now I have this on this higher time frame for a reason, because one of the things we talk about is, one of the things that we always talk about is support and resistance lines. Okay, this is on a monthly, and this is all the way back to 94. I want you to understand why we start on a higher time frame and come down. And then we literally just went through where we talked about the different types of market, and we talked about the different types of markets that we've had. And I don't want anybody to ever tell you that the type of markets that we're in does not matter. So let me show you this for a moment, and then we're gonna go down, we're gonna break this down, and we're gonna talk about the BYOB cash out, and I'll help you understand why the time frame confluence is so important that goes along with that. So here I am, this is our monthly. You see this support and resistance line, look how important this is. You understand how, where we are right now with this currency is hitting on a heavy support and resistance line, okay? On a heavy support and resistance line, on a major, let me say major, not heavy, same thing as far as what I know I'm saying, but let's talk about a very dynamic, a very, very, very important support and resistance line, a major one. You notice that until 2016, this currency pair had never crossed this line. Now, what was going on in 2016? You know, I wanted to know. So I went back and I looked it up, and this dropped in a matter of, in one day. It dropped significantly and it broke this line, and it's been struggling to get back across it. Now, what happened back then? What actually transpired back then? Guess what? Brexit. Initially, they were supposed to, that's when the vote was happening. That's when the vote was happening. See, none of us were trading then. I know I wasn't, but that's when the vote was happening. That's when, you know, they were making that decision. Do we leave or do we stay? Do we stay or do we leave? And of course they do exit polls, and all of the exit polls and everything, you know, all of the polls leading up to that basically said that they were going to stay a part of the EU. And guess what happened? They didn't stay. And so what happened is they broke this line. They dropped the lowest this currency had ever been. And so they broke that line, and they've been struggling to get back up. Now, what's about to take it back over the top? Possibly Brexit. What are we talking about again? Brexit. So they made the decision to break up. They've been dragging along the bottom. Now, are they going to be able to co-parent? That's the question right now. Can they co-parent? So this is when they made the decision. Look how long this breakup is taking, and look at the impact it's had on the market. So you always, why do we spend so much time on the news? Why do we spend so much time informing you what's going on in the market and what's going on in the world? Why do we spend so much time on each call helping you understand the significance? Why do we postpone HFX? Why do we do those things? Why? Because of simple, it's real simple. We have different types of markets. We've been in a political market. A political market, the market goes sideways. In a political market, it has no direction. The political market, we've seen, look at what Bitcoin is doing right now, how it's rising to the highest it's ever been. So all of these different things and these factors impact the market. So yes, so you definitely want to make sure that, you know, it's all impacted. Think about it. So you just said almost 5 years, but think about this. So, and you're correct, it's almost. So when you think about that, have you ever seen somebody in a breakup in a relationship where it's taking that long for you guys to cut ties, or from when you made the decision, or when it's taking that long and now all of a sudden you're here? That's literally what's happening. So imagine the emotional toll and emotional impact that it has on the market. That's what's been going on with this currency pair. This is when Brexit happens. This is when we made a decision to break up. This is why you have to be non-emotional when you trade. This is why you have to understand what's happening in the market when you trade. So, so you still want to know. So even if I'm doing 10 pips and cash out, I need to know that I'm sitting on a major support and resistance line. I need to know that. So that's why, even though I start here on a 15-minute chart, I'm here on, and look what we just got a call for, a sale. So what is it doing? Bouncing off of there. So even though I break it down and I come back down here, so you see that gap that's right there, because I was on a monthly. So you know how I always tell you there's a range. There's a range that happens in between there. There's a range that is actually in between that. So when you understand that there's a range that happens, of course, the range is going to be extremely a lot larger coming from the monthly because that support and resistance line. So we're going to make one down here. We're going to put one down here. So of course, that's why when we put them, we start on the higher time frames, which you can see on that hour. Okay. And so now you see that zone that is probably, you know, it could be bouncing up in between. Let me come up just a little bit. So it hasn't really been up here, but you see how it's spiking up in between there, it's spiking up in between there. And some of you all will go grab some pips in between there, but you see how it's spiking up and you see how it's kind of being held. But even when it spiked up, did it really go past this area? So it wicked out up there, but did it really go past that area? So that's a range. When you hear me talk, not zone to zone, but when you hear me talking about those ranges that they trade in, like not, and I'm not talking about the range where you go buy the uptrend range in a sale. I'm talking about because there is no such thing as a definitive line in the market. Even though we're looking at a line in the market, there's no such thing as a definitive line in the market. So just want to definitely highlight that. So you can see why it looks like it might break that line. It'll go up a little bit and it'll come back. So hopefully that brings some clarity for someone. Now, let's come on back down here. So before I get into this cash out, BYOB cash out, do I have any questions, comments, or testimonies? Any questions, comments, or testimonies, drop it in the chat. Drop it in the chat. I want to make sure I get those questions, comments answered. Questions, comments, or testimonies. All right, so we're good. We're good. So we know how to be disciplined. We know why, you know, why we need to understand what the market's doing. We know all of those things. We know we need to put our stop losses in. We know why we start on a 15-minute chart. We understand all of that, but we know the 15-minute chart does not give us direction. If I can't give you any takeaway from tonight, other than everything else, the 15-minute chart does not, you know, it does not give you direction, but it's, you want to start there because that's that tighter entry. It's either a tighter entry and, you know, so just so many different reasons why. So I was amazed last week on how many 777s I was able to get on Thanksgiving Day. See, that's because you're the signal. Look at that. Look at that. So yesterday, this was me with Bitcoin. I could not get out. I had to ride the wave. You can get out, set your take profit and your stop loss. But yes, you do ride the wave. We do ride the wave of the market. But you also, that's that understanding of where we are in the market, right? That's that understanding of what transpired and what's happening in the market. So you definitely want to understand that. And so now, so as I look at this, what I'm seeing is what is the BYOB cash out? So let's talk BYOB cash out and add some time frame confluence to it so we understand. So we already know where this line is. We know where that line is. And now you see the vibrato actually called this for a sale. And we'll come back and look at that one too. So now what I'm looking at is my stochastic. I had that blue line cross over the red and a downward momentum. I have the blue line cross over the red and an upward momentum. My stochastic is my leading indicator. I'm using a stochastic, I'm using Hikinashi candles, and I'm using PSARs. Now, all three of these are our areas of value that we use when price action trading. So, and price action is what you're learning in the academy, the basic and foundation of trading. And so this just puts a little twist on it. So I have my stochastic, blue line cross over the red in a downward momentum. I have a red candle with a flat top. That's what I'm looking for. Now, what I want to highlight, so what I want to highlight right here is where this blue line crossed over the red right here. So it happened right here. This one actually lined up. So thanks for your teaching, my fantastic leaders and personal study, all of this starting to unwind. I love that. I love it. I love it. I love it. So here we go. Now this blue line crossed over the red in an upward momentum. You can see where this crossover happened. Let me make these yellow for you guys so you can actually see them a little bit clear. I like to make sure that you all can see it. So now this one lined up. This one just really helped. It lined up directly on top of that. So what I'm going to do for the purpose of viewing is I'm gonna move this to the side. I'm gonna just move this to the side. Now, what you see right here, blue line crossover red and an upward momentum. You have a green candle with a flat bottom, PSR flip to the bottom. So you see how this one, everything seemed to happen at the same time. So now, maybe everything shouldn't be yellow. Maybe not every single thing. But now you see how everything lined up at the exact same time. Now, what I want to stress right here on this 15-minute chart is, and so this one, once again, it's not quite set up yet, and we'll look at the confluence on that one first. So what I want to stress and what I want to highlight right now is, as I'm looking at this chart, as I'm seeing this, okay, as I'm looking at this, that my blue line crossed over the red. I have a red candle with a flat top and a PSR flip. If I'm trading on a 15-minute chart, that's where everything needs to line up. If I'm trading on an hour, that's where all this needs to happen. If I'm trading on a 5-minute, that's where all of this needs to happen. So whatever time frame that you're on, that's where my strategy, the BYOB cash out, think about it, your strategy, your trade, this is where it has to line up, okay? That's where it has to line up. Now for my time frame confluence, let's go to the hour first. I'm gonna shake you up a little bit. You guys are used to me going to the 5-minute. So as I come here, as I look at this, all right, actually, let me go back down here. Did I put this arrow? Yes, I did. Okay, so let me go to the hour. So understanding. So let's talk about a few things. So from here, now what we're looking for, this call for a sell at 134,192. 134. Let me grab this. 134,192. That's where it called for a sell. So pretty much on top of the line, we already on. Pretty much that's where it's at. I like drawing that call price so you all can see what that call price does and why we pull those call prices. Now, as you can see, what I'm looking for is I'm looking for that sell, okay? I'm looking for a sell. So I'm on hour where my confluence happens. What's happening here? You see my stochastic beginning to have that curve down. My stochastic is beginning to have that curve. I have a red candle. Remember, I'm not looking for it to be completely aligned right here. I'm not looking for that on this time frame. I don't need a PSR flip. I don't need a flat top candle, but I personally would like more than a doji candle because of what you see. You still want to pay attention. What's the market been doing? The market has been pushing up. That's what it's been doing. So I still want to make sure that I have, you know, a candle, some sort of candle. So that's what you want to see. That's what you want to, but it's been flatline. Now we're starting to get a little curve here. You see it, it did cross over. We're starting to get a little curve. So that's what it means by it looks like a trade that we would take in a little while. That's what that means. It looks like a trade we will take in a little while. Now, when I come over here, what I'm looking at, I have a blue line crossover the red and downward momentum. I have a red candle with a flat top, PSR flip to the top. So, but that's not, I don't need all of that on the hour. And the reason I pointed that out is because do you realize that you would have missed an hour trade, an hour momentum, an hour movement had you waited on that? So you see that this is where that manifested. This is where that moved. And so what happened? I definitely have my stochastic in the downward momentum. All right. I definitely had a stochastic in a downward momentum. On this one, I have a red candle. Now, what I would do on this one is I'm going to just check the 30-minute just to kind of give me, to make sure we're headed in that right direction. GBP, and that's for those of you all who would want more of a candle. I'm mentioning that because we're talking about a GBP pair. Let me give you the disclaimer to the rule. If you are a 111, if you're a 111, just a 111, meaning you're brand new, welcome, welcome, welcome to BYOB Cash Out. If you have not mastered that, don't worry about going to the 30-minute. Let's elevate. Let's do this in a process. Let's get our skill set together. Let's step this up one thing at a time. So you see we have our red candle. So we'll drop down to the 30 for that. On this one, I'm not testing that 30-minute. I'm just not. And let me tell you why. So it doesn't even matter to me what we're going to see on that 30-minute time frame. This is where your discipline comes in. My stochastic is still in a sale. That's when my stochastic is in a sale. So I have a red candle, even though it's pulling up. Now, this, I promise you guys, can fluctuate between green and red and red and green and green and red and green because of the type of candle it is. This just happened to close at the bottom of the hour red. So that it closed lower than it did because this is like that little doji candle. So as you see that, the reason it's red is because it opened higher and it closed lower. That's it. But during the duration of that hour, this could have been higher and it could have been green when you looked at it. The time you looked at it, it could have been green at 45. It could have been green at 55. But when that hour hit, it closed lower. That's why it's red. And we've seen that happen because because of the type of candle. That didn't happen with this candle, but it can happen with this one. But would I check my 30 on this? Even if this was green, I'm looking at this. I'm telling you, I got a green candle. It's pulling up, but then also my stochastic is pointed straight down. So those are things you want to check your oscillator and your price to see, are they confluent as well? So now let's check out 30-minute. And checking a 30-minute, you see how the 30 has started to buy, like what I tell you was gonna happen. And now as I come over here, you look at this candle. So on this one, you might've waited just a little bit just to get that comfort zone. But then once again, as you begin to understand and you begin to know. So if I knew that I was here, if I knew where I was at in the market, understanding you're at that significant support and resistance line, then you might have, but understanding you're not, then you might've waited. So it's all about where you are with your education. It's all about understanding, because when you're a one-on-one, I guarantee when I first was learning how to trade, when I go back to that, I can guarantee, you know, just that elevation of education, you know, I waited for the perfect setup. And then of course you start getting that relationship with the market, and then you start saying, okay, I know this is going to move. So it's okay if you see somebody else drop a 777 and you didn't. It's okay. I promise it's okay. That's that evolution. That's that elevation of education. And so now as we're looking at this, we saw that GBP USD signaled for, or it alerted for a sell. You see where we are right now. It's not ready. It's not ready. And that's what the patience profit is. We already knew this was in a buy. We know that that 30-minute is in a buy. And our hour, you see what's happening with our hour. So we already talked about that. So that trade is not ready. Now let's check our 5-minute, something we just haven't done yet. This still hasn't even begun to come out of its correction. You see how important that 5-minute is, okay? That drop down, that's what that is. That's that drop down. That's so very important. And as I look, now, as I look, you can definitely see how that sell is happening right here, and that buy is still happening right there. But on the active live trade that was alerted, we haven't even, oh, look, we just got a new 5-minute candle. Look at it. You see how that correction is starting to happen just a little bit. So just understand, look at that PSR right there. You might not even see it because it's on that line. And this line is red, so that means it's selling. So that's something else. That line is red, that means it's selling. I can come over here. If the line is green, that little dotted line is green, that means it's more, it's the strength is in the buy. The strength is in the sell over here. So you see how it's hit that line and we're starting to get that little correction. So, but no, it's not a ready trade. So just, yeah, don't blindly jump in any trades. So we have about 10 minutes left. Questions, comments, testimonies. I want to make sure everybody understands time frame confluence. I want to make sure everybody understands the power of compounding. I want to make sure. So what can we do to get a better pip reaction time? That's a good question. Now, let me help you with that. That's you. Your mind is blown right now. Well, I'm glad you're having a good evening. So what do you do to get a better pip reaction time? So let's go to a higher time frame. So understand so first of all, for my 111s and my 222s, let's talk about that. So my 111s and my 222s, understand that pip reaction time is simply how long it takes you to get into a trade. That's another reason why time frame confluence is so important. So I'm gonna just drop some lines on here and I'm gonna change the color of them because I want you to really understand what that means. So as I drop this on here, so let's say this is where that it triggered. This is where we were looking at the trade. So we're doing, most of these are market execution until you learn your buy stop, your sell stop, your buy limit, your sell limit. That's what most of these are. So it might take you might not get in the trades out here. This GBP, so we know it didn't move. So, right, GBP. So we had almost 12 pips. Now you're looking for 10 pips. Your pip reaction time is how long did it take you to actually get into that trade. This is another reason why time frame confluence is important. Now, right here, you might now, oh, your take profit, guys, come on now, your take profit. Your take profit is 10 pips and cash out or to the support and resistance line. That's where your take profit is. So you know that you would have taken profit. You can set a take profit somewhere up here, or you would have just done 10 pips and got 10 pips and cashed out and got your 777. So regardless of which one it is, understand that you still need to surpass your pip reaction time. You have to, so I need my pip reaction time, that's what, 11, 12 pips in this example. I've seen some higher than that. I've seen some at like 6. It's just peep, it's your reaction time, how fast you push that button. Now, what else is you have to pass your broker spread, your broker fee. And then of course you have to get in position for, you know, you put your take profit in. Now your stop loss, and we just talked about that with the other chart, it's always below the PSAR or above the PSAR. Never, ever, ever, ever put your stop loss on the PSAR. This can actually, look at this one right here. You know, they can actually come touch that PSAR. Just do not put your stop loss on that PSAR. Now, to answer your question about how can you correct it, it's not about making it faster. I mean, you can do certain things like, you know, put your currency pairs in order on your MetaTrader 4. So, you know, you can have that already open on your phone, where instead of just going from on your MetaTrader 4 where you click like GBP USD, I can click chart on my phone. And that way I can just go to trade as soon as it's there. Like if I know I'm looking for it. I mean, you can do little things like that, but the reality is really your reaction time. And that's something that's been with us most of our lives. So, but one thing that will help you, and that's what, like I said, is that time frame confluence is important. Let me show you. Is no, we're gonna understand. Is it a buy, or if understand if you are counter trend trading or if you're trend trading. The trend is your friend. So if I am trend trading, then if I look at this, if I'm trading with the trend, this comes with, as you, the development, the evolution of the education. If I'm trading with the trend, then I know that I'm in that continuous rise. I'm in that continuous uptrend. That's what I'm in. So I know that I can trade this as well, but you also understand that you're in a counter trend trade. Now, I will tell you that, you know, that time frame confluence is so important, especially if we are counter trend trading. Now, you know, especially if we are counter trend trading. So that's marking up your charts the night before is not going to help you with your pip reaction time. Pip reaction time is simply how fast you enter a trade. How fast does it take you from going to see where you need to enter in a trade to pushing the button? That's your, how long does it take you to open the phone? How long does it take you to push the button? How long does that take you? So I can have everything lined up and ready to go, looking at it. And if it take me 10 minutes to push the button, not, of course, that's an exaggeration, but if it takes me 10 minutes to push the button, then, you know, you're going to see someone else with a 777 before you. If it takes you 2 PSAR flips to push the button, somebody else is going to have a PSAR flip before you. So, I mean, a 777 before you, not a PSAR flip. But so just for understanding. So can I have clarity on waiting on a correction to be over? Yes, you don't want to get in a trade right now. So just like when we were looking at this, if I come down to the 5-minute, so I don't want to get in a trade while this is in a buy. Now, of course, this trade wasn't ready. It's still not ready. But if I see that, let's just say we were here and that PSAR had flipped or something. If I drop down to that 5-minute and that 5-minute is in a buy and I'm looking for a sale, then one or two things is happening. It's either in a correction and it's going to come back with me, or it's headed in a different direction. And I can tell you more. That is so important because think about it. On the higher time frames, oh my gosh. But the 5-minute, you get a new one every 5 minutes, but perfect practice makes perfect. So yes, you want that to also, that's why we drop down to the 5-minute. We need to drop down and we need to go up. We need to drop down and we need to go up. And so on Thursday, we'll get a little bit more detailed. You know, we will get a little bit more detailed on you know, kind of looking at a little bit more and pulling some of these trades. And the reason why I want to do that is because of the simple fact that we are now transitioning out of that political market. So we've been gearing up in that political market, and I've heard your comments, I've heard your concerns, I've heard all of that, but I don't want anyone questioning their skill set, because if you all 777 the way that you did and the way that you have been doing in a political market, when we get back to the nice smooth markets of, you know, just the nice smooth markets, you know, where we're talking about the trending markets, the, you know, when the feds come do their reports and they just dictate what type of market we're going into, and we just move nice into those nice smooth markets, those trending markets, then I'm just get ready. And that's why that compounding sheet and that journal is so important for you to get disciplined. Because if we're not putting that stop loss, you said, thank you, that just cleared up for me. I have learned to put a stop loss much lower, and don't see, look at you get more comfortable. But please, guys, put a stop loss. You do not want to trade to turn around on you. And I don't mean like turn around, it's because you don't want to sit there. Like, let's say you were counter trend trading, or you were counter trend trading here, and then you're saying, it's going to turn around. 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 And guess what happens, right? So yes, the stop loss is your friend, because how many pips did this? That's 164 pips. That's 164, 165 pips that you're sitting there saying, it's going to turn around. It's going to turn around. It'll turn around in a minute. No, it's not. It wasn't done still. And even that's like I told you about that trade. You understand where we are. So we just had GBP USD on a 15 call for a sell. Now look what's happening. GBP USD calling for a buy on a 5-minute. Now you understand why, because you know where you are in the market. You know what's happening in the market. You know how important Brexit is, right? You know how important these things are to taking a trade on this currency pair right now. So you also understand we're at that major support and resistance area. So you understand. So the education is your friend. So don't forget this. Look, see, I guess I'm excited. We haven't had a call in a while. So it's actually 10 o'clock now. So I call, it's time before I call, it's over. But I definitely want to make sure that this brought clarity to you. I want to make sure that you all are, I missed you guys too. I want to make sure that this brought clarity. I want to make sure that you all, you know, definitely understand what is transpiring. I want you all to understand time frame confluence. I want you all to understand the market. And I want you to all to understand that. So thank you for bringing down compounding and discipline. Awesome. Most definitely. So most definitely. So let's see. So I want you all to understand that. So thank you for explaining the compounding. All right. So awesome. You guys are so welcome. Well, ladies and gentlemen, do not go in.